Hello, I'm Theresa Connors. Welcome to this Finextra webinar in association with Visa Direct, where today cross-border payments are under the microscope. And I think it's fair to say that we live in interesting times. We've got a lot less certainty than we had today than we've had over the last couple of decades. However, cross-border payments remain complex and intricate. So what considerations and strategies then are there to enhance cross-border solutions during this period of economic uncertainty? And that's a really big question. And I'm delighted that I'm not the person to have to answer it, because I've got a wonderful panel of experts here who are going to dissect that question and the various aspects to it. Our panel will shed light upon how the global economic and the global regulatory landscape is shaping cross-border payments today, how emerging technologies will transform the landscape, and against that backdrop, which is quite complex as it is, what are the strategic options then for fintechs for global expansion? You'll find information within the resources section on the screen here for download upon this topic. Now, in addition to me asking our panel questions, you have the opportunity to do so too by using the chat box on the screen. I will do my best to put as many of your questions as possible to the panel during our discussion. You can also share your view and have your voice heard by responding to the poll questions that will come up. So I've mentioned our experts, so let's meet them. Stefan, if I could ask you please to kick off our panel introductions.
Sure, Theresa, thanks a lot. No pressure, by the way. We hope being the experts on the spot in the panel and ask all your questions. First things first, my name is Stefan Münch. I am the head of strategy and commercial operations, including go-to-market for Visa Direct for the entire Europe. I am a payment expert, more than 20 years in the game. Did a lot on the core side of business on cards, but I joined like about 8 months ago this Visa Direct team, because I think that's literally the future, especially when it comes to cross-border payments. And I'm pleased to be here and looking forward to the panel.
Thank you. Ramon, if I could come to you next, please.
Thank you very much, Theresa, and thank you very, very much for having me. Ramon Villarreal, payments industry lead within Red Hat. Similar to Stefan, I've been around 18 years in the payments industry, mainly on the processing side. Work in different banks, but also central infrastructure organizations. And then a few years ago, I decided to move into the more technological area, which is Red Hat. We have a lot of do a lot of work with organizations in implementing, but also managing cross-border, but also account-to-account and other payment systems. I'm happy to be here and looking forward to the conversation.
Thank you. And Gary.
Theresa, thanks for having me, and it's great to be on the panel. Unfortunately, I'm a bit older than you guys, I think. My first company was Wildcard Systems. You wouldn't realize it, but we were the first issuing processor ever of prepaid cards way back in the 90s. In 2005, when I sold the company, 7 of the 10 largest US banks were customers, 50 banks around the world. And in fact, Theresa and Stefan, the very first Visa card ever issued in China was not a credit card, it was not a debit card, it was a Visa prepaid card. And the use case was travel, and my company powered that for the 5 Chinese banks that launched it. I sold the company to a public company called eFunds, and then I was on the 5-person team that sold eFunds to FIS for $1.8 billion 2 years later. Long story short is I've also been an advisor to the Philadelphia Federal Reserve Bank since 2005, but these comments are my comments alone and not that of the Philly Federal Reserve Bank system. And what Payall has done is we have built, and we believe this is the case, the first ever end-to-end infrastructure for financial institutions, regulated financial institutions, to offer cross-border payments that are safe, transparent, efficient meaning fast and low cost and inclusive. And we deal with everything from counterparty risk to transaction risk to multi-jurisdictional compliance and payment orchestration in a very modular way. We view ourselves as being backward compatible to fixed correspondent banking, as well as forward compatible to power things like Visa Direct and MasterCard Move. We never compete with banks though, or FIs or EMIs or fintechs. We're techies. We're the guys that try to help give them access to these cross-border capabilities, and again, that make them safe, transparent, efficient, and inclusive.
So partnership, and thank you. So I think we can all hear that there's a real breadth and depth to the panel. So thank you for that. Before we get into sort of like the meat, as it were, of the panel discussion, I do just want to get a sense from the audience of the strategic direction that companies are taking at the moment. So if you could please, audience, answer the poll question, which is this: what is your company's primary focus for cross-border payment extension in the next 12 months? Now, I recognise that you might want all of them, or 4 out of 4, or 4 out of 5 of them at least. But what is your primary focus? Is it entering new geographical markets? Is it enhancing cross-border payment infrastructure? Is it forming strategic partnerships with local financial institutions? Is it developing specialised cross-border solutions for specific industries? Or indeed, have you no plans at all for cross-border expansion? So we'll come to the results in those in a couple of minutes, but to get the ball rolling, Ramon, the cross-border market has miles or kilometres, depending on where you are in the world, of old rails. They work and they're trusted and everything, but what innovative exploration are you seeing when it comes to enhancing infrastructure?
Yeah, I mean, it's quite interesting because, as you mentioned, if we talk about 5 years ago, we had or maybe a little bit further back, we had the basic method of cross-border payments, but in the last few years, the market has accelerated. We have capabilities that are coming in from Visa, from other organizations in the space of like Visa Direct. We have capabilities coming in from cross-border or networks that are coming in the more fintech space, or what's happening, for example, with Ripple in Africa or other networks. But also we are seeing an expansion in what can be done with the real-time rails. I think the challenging part of that is that it's not an homogeneous system. You have a lot of different networks, and it's really, really difficult to choose. I think that so if you see, for example, what is happening in Asia with they are looking to enable connectivity between the real-time payment frameworks around different countries, and you have the connectivity between UPI and Singapore or other countries. Now they are looking to expand that. It's a constantly expanding set of capabilities, and there is a lot of options. And at the same time, you can see that the regulatory space is convoluted. It's complex because you don't know how to operate. You don't know what is going to be more efficient. You don't know what's going to service your operations in different countries. So it's quite an interesting space at the moment. But again, payments in general at the moment is quite interesting.
It is, and there's a contrast I think you've described there between sort of different economies as well in terms of pace and initiatives that are going on. Stefan, before I get your thoughts, we'll have a quick look at the poll results for just kind of the payment expansion in the next 12 minutes. Aha, here we go. So, we have a clear leader here. Enhancing cross-border payment infrastructure is out by a mile or a kilometre of 45.8%. And then the lowest piece is entering new geographical markets. And we might go on to discuss why that is. But let's say that. So, Stefan, what are your thoughts here on these results?
Well, I think it's also coming back to what Ramon just said, right? In principle, there are many rails to choose from. However, like currently, or most recently, we are living in a different world when it comes to being a consumer myself, right? Digitalization is all over the place, and based on that, the expectation from a client towards also cross-border payment are going to be different in the future than they used to be in the past. The field has been dominated by long-lasting rails for quite a bit of time, for good reason. However, I think now it's about the time also, to use like a bit modern systems overall. And when I look at the results enhancing cross-border payment infrastructure, that screams exactly that. A lot of our listeners today are about to think about how they can actually build up on their existing rails or their existing UX, and that's, I think, key also going forward, right? Yeah, so that's like my first like instant feedback on when I see the poll, right?
Absolutely. And does Gary, Ramon, does what Stefan said there with regards to the poll, does that resonate with you?
It does. When I take a step back and I think of infrastructure, and when people answer these questions, we never really know exactly what they mean by infrastructure. If I'm a financial institution, am I speaking about the fact that inside my core bank system, when my customer presses send to make an international transfer, that my software doesn't automatically determine, can I route this payment based on the size of it? Based on the size, do I need a bill of lading, customs declaration, invoice? Okay, if I get that, how do I get it? How do I analyze it? How do I determine that it's legitimate? How do I make sure there are no sanctioned vessels, people, ports in there? Or does the infrastructure question mean that as a bank, I'm stuck connecting only to a correspondent bank that has a finite set of capabilities? And so now, do I need to supplement that with Visa Direct or something else, or do I need to find another correspondent bank? My view is all of this represents infrastructure, and all of it's been pretty bad over the last 50 years. And so the innovations that can come, can come from a lot of different places. And I think the point that I would say to those on the audience who said this is a big problem, they're spot on. And I think it's screaming for capabilities to make this problem less painful than it is.
Okay. And I have to say, as a career banker up until a couple of years ago, I know they're old rails, but they still work. Okay, so there we are. But I get that change needs to happen. It's just I can't go to sleep tonight unless I've said that. Ramon,
but Theresa, you have to understand, customers want things now. I mean, look at our whole world. It's now. When they press on a cross, they want it now.
I know that. And Ramon, sorry, what were you going to say?
No. I mean, it's quite interesting because Gary has a point. I mean, customer wants the action to happen now. Customers have been asking just for a long time for services that are able to deliver the capabilities now. And the fact that you don't know what is the potential cost, the fact that you don't have a clear visibility of the time that is going to last has always been a problem. And not only for the customer, also for the financial institution. How many correspondent banks you're going to have to use? What is the process that is going to follow? It's a really complex environment. I think and it needs to change, and we need the capability to do it now. I think that there is another really interesting point, and I'm stopping in one of the maybe not so relevant 16.7 number of responses say they have no plans for cross-border expansion, and that puzzles me. It puzzles me so much because in the current economy, I mean, and in the current world, cross-border is a key capability that we all have to have in consideration.
Potentially we might go on to talk about why that 16.7% feels that, or a potential reason as to why that 16.7. It surprised me as well, that number, by the way. That was quite. It's significant, isn't it? In research terms, that is a significant number. So there we are.
And I wonder if it's because of the complexities. Sorry, just wanted to highlight that.
It could be. No, you're absolutely. And on the introduction, I said it's complex and intricate. Absolutely, it could well be that. It's like, I'm here already. I can't be replicating that again. But we will see. Stefan, when we think about this, we've spoken. Banks have dominated or are dominating the cross-border type space, though. But what competitive advantages do fintechs bring?
Well, what they always brought to the table, right? That they can be so first they don't have any legacy system, right? So they can actually start from scratch. Simultaneously, they can also focus on on the UX as such, right? And into a niche segment. And whenever they do, they be successful over time, right? And when it comes to cross-border payment, there is still a lot of opportunities because yes, we talked already about speed. The consumer wants to, is used to actually have it today, now, not T+1 or whenever. But it's not just about speed. When it comes to traditional like correspondent banking, there is also a lack of transparency for the consumers. So they don't know actually how much are the costs, which are, by the way, far too high. I think the average is still about 6% for a consumer for a cross-border payment, which is a lot. It's also good news because that means there is still a lot of like opportunity for fintechs to go, within that area. So it's quite a rich, I wouldn't call it niche segment, but a rich segment overall. And the transparency factor is super important too, because it's this combination of, yes, I know I can send money to Gary if he's in North America instantly, right? And I know within my app provided through the fintech that it's not just flowing directly now instantly, but I also see to what costs, right? And this level of transparency is new. Like when I wired like money to, I don't know, North America a couple of years ago, it was like almost, okay, signed and sealed, and you never had like the feedback whether it received. You got it actually, of course, but a bit delayed. So that's the things, and I think it's not just the correspondent banks or the traditional banks. The main issue, well, not about issue, I wouldn't call it issue, but they need to balance that out, the existing ecosystem they are having, the rails they're using, the legacy system they're operating. So of course, for them, it's a bit more difficult to move as fast and as niche as a fintech can do. And internally, we do speak about 65 different use cases when it comes to cross-border payments. And, there are ample of opportunities to go after. So I'll pause here, but I just to give you a sense of understanding, right? Speed, transparency, costs, go after like the niche, not the niche, but like, go big, choose one use case and go big and deep in that. Make that really work. Well. And then then you move on to the next one. That's something
and if you're looking at 65, I can't help but think that's an awful lot of customer journeys. But I know a lot of them are replicated. It's just with my old product management hat on, I'm thinking, wow, that's a lot of use cases. Gary, Stefan has talked about the advantages that fintechs have, but the other side of the coin, of course, is there are challenges to overcome. So could you describe for us from your experience what sort of challenges fintechs face?
Sure. I think one of the first challenges for the fintech is to decide, do you want to view banks and other financial institutions as friends or foes? In other words, if you recognize and you're an expert on and you have a deep understanding of a particular use case, and by the way, given the size of the market, even though there are 65 different use cases, we're talking about hundreds of billions or trillions of dollars. It's not like tiny. So a fintech could go very deep into a use case and then take that to a bank and partner with them to help exploit it. Or they could choose to compete, but that's challenging because now you have licenses and customer acquisition costs. It's not a very capital efficient way to leverage investor dollars, but that is a viable possibility for the fintech. The other element the fintech has to consider is the regulatory environment and how do we adapt to that. And then also in many jurisdictions, fintechs don't have access to capabilities that a central bank might provide a bank, for example, deposit taking or access to the domestic rails. And so you have to navigate all of these waters and figure out who you are, who you want to compete with, what's your product going to be. It's not an easy exercise, but it's one that if it's done correctly and you choose to partner with a financial institution, who, by the way, I think one of the toughest jobs in the world is to be head of product or head of technology at a bank. It's an unfair terrible condition to be in, because you spend 75 to 95% of your capital on three things. One, trying to protect your data and systems from bad actors and hackers and all the guys that want to compromise you. Two, trying to keep hundreds, if not thousands, of disparate systems current and just keep the patches and the bugs and everything sorted out. And the third thing is adapting to ever-changing regulation. So how do you have time to really innovate and invest in a particular use case? So a bank, God bless you, you've got a tough way to go. Find someone that can help you navigate these waters, maybe like that nimble fintech, and do something big. And the fintech, I would suggest, think about that versus trying to compete with these banks. So it's a dynamic that needs thoughtful consideration by the fintechs.
And what you said there will really chime with many of the product managers and product teams listening as well in the banking sector and possibly beyond as well. And I don't want to dwell too much, Gary, on pain points, but if you were to look across most of them, and I know you've illustrated a lot, what is the biggest pain point, would you say, for a fintech?
I think they are tagged with, either accurately or inaccurately, having, in many cases, weak risk and compliance capabilities. Fintechs sometimes are believed to be great at Flash and UX UI, but not so good at the other stuff, and it kind of scares banks. And I think this is an area that requires collaboration with experts who understand this, collaboration with the bank that you're partnering with or with others, because the last thing you want to do as a fintech is come out on that weekend of risk and compliance. It can wreck your company, your reputation, and you just don't want to find yourself in that situation. Now, let's all be honest. If you look at the stats, the banks don't have the best history, and it's not necessarily their fault, the best software, the best capabilities to also execute complex compliance and counterparty risk and risk in this space. So it's a problem that everybody faces. It's one that we happen to be very good at, but it is a problem that everybody faces.
And you're right. So instead of tackling that problem on an individual basis, coming together, you would think would solve it. I'm going to sort of to switch the lens of our conversation now, because I talked about in my introduction, I talked about uncertain times. So we have a poll question coming up here. And I want to think about the economic landscape, and I need the sort of the view from the audience, if I may. What is your biggest concern regarding economic uncertainty when it comes to cross-border payments? Is it currency volatility? Is it potential recession impacts on transaction volumes? Is it the changes to trade policies and tariffs? Is it increased competition from new market entrants? Or is it customer adoption challenges in uncertain times? Now, I know they all present a challenge, but if you could say the sort of the one that they're sort of that mostly is keeping you awake at night, that would be helpful. And then we will come back in a couple of minutes to look at the results. Stefan, with a macro lens, it's sort of activity on the world stage, US sort of trade tariffs policy, coupled with the cost of living crisis globally as well, it could bring volatility and recession. What impact would that have on the cross-border payment market?
Okay, well, that's a tough question. So of course, like you're asking, the guy from a US company, commenting on potentially even US
You're not
tariffs.
running the government, it's okay.
No, all good. So first of all, just to clarify on that point, we don't see us as a like US, led company as such as all, right? We are talking about cross-border payments, which you only be successful if you actually be very locally acting and entrenched, which I believe like Visa is big at with presence all over the globe. So just like on this caveat before I go into like my 2 cents on tariffs. And so when I used to be at the university, what I learned is that tariffs are not good for trade in principle, right? It increases costs for, it depends on which side you are, receiver or not receiver. However, when you increase like costs within trade, why would you do that? So first, when you have a look into the history, normally like on the mid to long term, it never used to work out. So like an open, like a trade without tariffs always performed better for economies. That's just like what we can learn out of history. You still can and should maybe do that with like an idea of short-term changes, or trying to push well not trying trying to actually do some behavioral changes for your own economy. And I think that's what US currently is trying to do. The outcome we're going to see, like all of us, right, anytime soon, whether this is going to be successful or not and to which level. But like for me, tariffs are not good as they increase costs, and that goes on the back of trade. So what this also mean is, like, what would that could mean overall is, and you painted it already out, that could lead to recession or potential recession. A recession would, it depends like where you actually have a recession and how big this market actually is. If it's a big one, then that of course can also pull other markets into the same situation, and you could actually end up in some sort of a global recession. So, and I'm sorry for this lengthy, editorial teaching type of discussion. But I'm trying to now come back to the point of your question is, if that, whenever that happens, and we've seen that before as well in the most recent global recession around COVID for fintechs, of course they had an impact, quite a bit. I think the biggest impact is when it comes to funding. Fintechs, they are dependent on fresh money until to that moment when they are stable enough, to live and breathe on their own, which is not always easy. And I think Gary can actually, tell a lot of stories with his background. And to get access of cash is remarkable more difficult during a recession period than without a recession.
It is, and you say that there's also something too about supply chains as well, isn't there? And kind of and then sort of, if you like, feeling the effect of it.
Yeah. Well, in the supply chain, it really depends again. Like when trades on what? If you are a company, well, we are talking now about fintechs, right? Fintechs is the service industry within financial services, right? So yes, they will be impacted as well indirectly, because the consumers might be spending less overall. That could then again impact, their wages, everything on that. And that could also then maybe, lead to that they are not able to send to the same extent like remittance payment across the globe, right? So, but it's a let's say it's a delayed effect. And sometimes it's even the other way around, right? Because like currently I'm Swiss-based, so I do see, like, based on the recent uncertainty, what the US administration is currently doing overall with the tariffs. You also see the other side, like the pharmaceutical industries in Switzerland, they are benefiting because of this uncertainty, right? Everybody is still buying before maybe tariffs are landing. So, I could go on forever. It's quite an interesting topic overall, but I'm not an economist.
You're fine. You're fine. There are winners and there are losers. Gary, when it comes to market volatility, and Stefan said you've got some stories, but I'm joking, but good. But what effect might we have on sort of for market volatility in this space?
Well, let me start by quasi-answering or providing some perspective. And I tend to be very direct, so I apologize. But I think in the world we're living in today, perhaps more than in recent memory, with the addition of tariffs, with the addition of sanctions, with the changes to supply chains, with these effects are trickling down to local foreign currency reserves. And at the end of the day, if you're a bank or fintech in this space, you have to be agile and adaptable. And your technology and your partners must also be agile and adaptable. And if they're not, you simply can't offer product. You simply can't compete. And so, again, going back to an earlier remark, to the product executives and the technology executives at banks and at fintechs, you need to find great partners that understand in these unpredictable times, whether it's changing a simple report or whether it's changing where you can or can't operate, where you can or can't send money, or the limits that you may be facing, or how funds may be delivered, or the currency that may be available. There are a massive list of variables that old tech is simply incapable of accommodating. And so being able to be agile and adaptable is absolutely necessary in this landscape.
Thank you, Garrett. Ramon, do add on this if you like, but alternatively, we have had a question from the audience. Which says there are a number of cross-border payment projects and rails currently running and being implemented as we speak. What are your thoughts on the possibility of interoperability of all of these rails as everything evolves and unfolds?
Yeah, it's interesting because interoperability is going to be a problem that we are going to see in the future as we have newer and newer system. But I think the most important bit on that is that there are already interoperability projects happening. I mean, recently, for example, I think it was the Bank of International Settlement has been doing a project with the Asian economies, and they have been building a way to connect the real-time payments over there for actually connecting multiple countries, and they are actually looking for an operator for that system. I mean, obviously the payments industry is used to. We are used to creating a lot of systems constantly, and then we worry about interoperability afterwards. But I think it's becoming more a standard now. We're actually thinking about the standards of messaging. We're actually thinking about the way that we are going to make all of these systems operate. I think we need, and we are going to get more and more a drive from the regulators to actually get into getting those systems to operate together and being able to connect. It's just something that the market, but also the regulators are going to demand. So I see it.
It feels so obvious. It feels so obvious, doesn't it? That it's kind of like, why aren't we further down this track? But fortunately, you've given us a sort of a glimmer of hope there. Gary, do you share that glimmer of hope?
I don't want to be disagreeable or spicy, Ramon, but I think hoping for regulators to line up and sing Kumbaya is a folly. I mean, for 25 years, I've heard every bank saying that we need to do this, and there's not a single lawyer I've met who's ever once said, I see convergence, I see more separation than ever. And I would also say that we can't even define KYC the same in 5 countries that speak English. I mean, how is it possible? So my point is that interoperability, I think we should forget about. But I think we can talk about interconnected. Let's be, how many different versions of ISO 8583 and the use cases and the uses of ISO 222, but interconnectedness, technology experts who know how to interconnect systems and to manage the discrepancies and the disparity and to ensure the data that's required from one party to the next gets there one way or another. That's the key. So this sophisticated interconnectedness is possible. It's doable. Now, I'll share this as well. We can't stop there. In order for financial institutions and fintechs to operate in this interconnected world, we better have risk shifting mechanisms so that if a financial institution has a customer who gets defrauded in a way that can't be otherwise dealt with except through some risk shifting mechanisms, no one's talking about that. We think there's a way to do that as well, but it's a combination of interconnectedness, setting some rules of the road, especially for the real-time payment systems, and then risk-shifting mechanisms to protect those who can't otherwise protect themselves.
Perfect. I like interconnectedness. It's nice. It's kind of the same but different, and it's good. Ages ago, we had a poll question on economic uncertainty. So I think we should have a little look at the answers. So, oh wow, here we go. So, oh, that's interesting. So. The respondents, increased competition from new market entrants was sort of top of the shop there at 31.8. Currency volatility reflecting some of what we said there at 27.3, and then the lowest potential recession impact on the volumes. So that's interesting at 9.1. So a fairly even but mixed bag, bar the 9.1. So that's interesting. In the interest of time, gentlemen, I'm going to move on. I'm not going to ask for your comments on that. Apologies. Ramon, can you paint for me, please, a picture of the emerging methods in the cross-border space to make our world more efficient?
Yeah, I mean, it's quite interesting because there is a lot of different evolving methods, and as I mentioned before, there is a lot of new networks that are coming in. I think the key thing is we are seeing a lot of these capabilities coming in with driven by not only new technologies but also geopolitical situations. I mean, you have networks that are coming in from different spaces, not only from the traditional like the SWIFT, or you have the capabilities that are being brought in by Visa, MasterCard, but also you have networks that are being built around our new geopolitical situations. BRICS is building its own network at the moment, and it's going to be a princess in the market. We have a lot of different capabilities coming into this space, and all of these functionalities are coming in. We have also the functionalities and capabilities that are coming in from stable coins, and crypto are coming in as an emerging capability for actually cross-border payments. The key thing to understand then is that it's not so clear-cut. It's not only the ability to transfer and execute the payment, it's actually the potential conversion cost between fiat currency and cryptocurrency that we have to have in mind. I think the key thing, and this has been a topic around the conversation, yes, we have all of these networks that are been coming in, and at the same time, we have an existing network based on correspondent bank that hasn't changed in the last 30 years. So being able to play in this space is how are you able to leverage all of these capabilities specific in the market that you're going to play. You need to understand what is the potential usage of stable coins, what is the potential usage of the digital currency, how are you going to enable new capabilities like QR code payments, et cetera, et cetera. It's a brand new world.
It is. And what about some initials we haven't thrown around yet, which feature quite strongly in industry conversations? What about CBDCs?
Well, that's the next frontier, right? The real question around CBDC is it's going to happen depending on the geography, and in North America we may have a different position whether that's going to happen or no, but definitely the UK is working in a digital pound. Europe has made an announcement around a digital currency. Brazil has a full roadmap that started with the creation of open banking, the implementation of the PIX network, and then the next step is a digital currency. We have already digital currencies in China and other places. This is something that's coming. The question is how relevant it will still be in the market with all of the other new technologies coming in. One is going to be the position that CBDC is going to play when you compare it to a stable coin, when you compare it with a digital money movement that is going to be enabled cross-border by other capabilities like Visa Direct. And whether it's going to arrive on time to be actually something that is going to be standardized. I do see the regulators are taking their time, and with a reason, but I feel that it's something that will be affected not only by the capabilities and the geopolitics, but by the moment that they start participating into the market.
Absolutely. And Gary, does that resonate with you? What role do you see there? What way is the market moving to?
Well, I think it's an exciting time, and I think it's an exciting time because originating institutions who need to offer cross-border payments have more choices than ever, but they're not always aware of these choices yet. And I will also say that no one choice is a panacea. If you're a stablecoin operator, you're planting the flag like you don't need anybody else but us. I'm not buying it. I'm not seeing it. I've dug into I know how the tech works. I know why it exists. And if you're a crypto guy, you're all in on crypto. I think these things are certainly they will coexist with other methods. There are use cases where in certain corridors for a period of time or under certain regulatory environments, people will move to something else other than fiat. But fiat is not going anywhere. But the key, when you take a step back, technology has changed our lives. When you think of sequencing DNA to self-driving cars to be able to land a rocket ship back in the launch pad where it took off, but it has not really been a part of the correspondent banking technology stack. That's all changing. So what I'm predicting, and the guys at Swift disagreed with me, some did, I think we're going to see more banks than we're not going to see a decline. I think there's a chance we're going to see more banks becoming correspondent banks again because of new technology. We're going to see these great innovations and capabilities from Visa and MasterCard really taking off. We're going to see some use cases for stablecoin. But in many of the instances where there's stablecoin, it's there because the correspondent banking model, the regulatory model, the availability of fiat wasn't there. So it was solving a problem that doesn't exist universally. So I think we're going to see variability, optionality, and it goes back to originating institutions, and all of the participants are going to need great tech to take advantage of it.
Absolutely, thank you. So we continue to talk about sort of a world in which different technologies and processes and stuff like that coexist. Stefan, like Gary and Ramon, you're immersed very much in this world. Through your eyes, what transformation do you see on the horizon?
I took a couple of notes because I would like to ping back to Ramon and Gary already did like remarkable speech within the future. So Gary, you mentioned also like the ISO and the different versions we have in the market, which is nuts. I would actually say it's about harmonization going forward. Yes, I also fully agree that correspondent banks or traditional banks are becoming more or again correspondent banks as well by using some of the other rails. So I'm fully bought into that one. I think that when it comes to stable coins, to start there, that's a very interesting one. And we believe like Project Agora, we are even part of Project Agora on a big level.
Could you just give me a sentence or two for those that might not know what that is?
Well, it's the discussion about like how stablecoin will actually be able to evolve, and we are doing that jointly as an industry, not like as this incumbent Gary's talked about as Visa, MasterCard is actually helping out the framework. So it's like for me in a very very simplified, it's the next evolution of a Swift network, but on stablecoin technology. Again, when stablecoin as such will be great for some use cases, for some areas. It's a great additional rail we can build, the entire industry can build on. But similar to what also Gary said in respect of fiat currencies, they're not going to disappear. Other rails, they're not going to disappear anytime quickly, and why should they? Because whenever they are performing, they're performing, right? So there is no need. When you also ask me like where I do see an eye in the future, so what we haven't talked about beside the like next evolution of rails, harmonization, tokenization, and all that element is agentic AI. I think we are not yet at the stage that we can talk about what agentic AI is benefit, or how cross-border payments are going to benefit from agentic AI. But we already now see that it's going to happen when it comes to commerce payments, and they will have a huge impact in near future. And I would foresee that as a consumer, when I get used to buy through an LLM model or an agent, my flights to Miami or to somewhere, by just talking to that, and then I do like very securely a transaction based on that. That for me, the natural next evolution is that I would like to do that as well for when it comes to cross-border payments. So stay tuned. What's coming from that element and from that angle on top, I think. Yeah.
And just developing that a little bit, because that sounds exciting and truly kind of life-changing and life-enhancing. I mean, what sort of time horizon would you put to that?
Well, I mean, to the point of stable coins, I think, we're on discussion currently with the industries all over. I think like flying. Oh, well, maybe I need to answer that question differently. I said at the beginning that I'm 20 years in payments, right? So even on the traditional, let's say, card payments, what I've seen is like every technology change, the loop, how long it took, was shortened. So the first time when we introduced, I don't know, chip and pin, it took, I don't know, don't quote me on the numbers, but I think it took us like 10 or 12 years for the industry to really, harmonize and use that. With introducing of the next, evolution of technology, those timeframes have become remarkably shorter. So we are living in a world where I believe, like when we talk about stable coins, like in the old world, we would have said like 7 to 8 years. I think now we're about more to 3 to 4 years. Agentic AI can happen on the same speed as well. But again, it's not like that overnight. Those movements will completely change the game, and only if you're capable of doing that, you're going to survive. That's not the message. I think it's just like it's an interesting time we are living in. Everything is speeding up. There are more options to choose from, and there are ample use cases when it comes to cross-border payments overall. So you can connect the dots, and you can almost like playing Lego as a child, combining those different opportunities as a fintech or as a traditional bank. So
there's something that I think is quite key about that you said about incremental change, because as you said, change we don't just wake up one morning and everything's different. It doesn't happen overnight. Sometimes it doesn't feel like we're changing at all. But then if you look back 5, 7, 10 years, you think, goodness, we have. So I think that's quite a valid point. I want to do a sense check now, though, with the audience, if I may. So reflecting our discussion so far, we've talked about what's driving and shaping the cross-border payments market. So this next question revolves around sort of what do you think it will do to transactions? So how do you expect your cross-border payment transaction volume to change in the next year? And this is just the next 12 months. Do you envisage there will be a significant increase, and that is more than 25%? Do you think a moderate increase, and that's between 10 and 25%? Do you think a slight increase, that's less than 10%? Do you think no significant increase, or indeed a decrease? And we'll come back to that poll in a couple of in a couple of minutes. Eric, I want to talk about expansion now, if I may. How can fintechs leverage cross-border payments in a way to expand to new geographies?
I mean, I'm not sure I've got a kind of a perfect answer here, but my experience has been that many times fintechs have more of a deep local understanding of a market than sometimes a traditional bank. And they can build off of that knowledge, whether there are social nuances or cultural nuances, and that can vary. In some economies, in some countries, the percentage of people that have bank accounts, traditional bank accounts, are very high. And some, it's a cash-based economy. In others, it's digital wallets or digital currencies. And I think a fintech's ability to understand that and to build capabilities that build off of and embrace that versus sort of, in some cases, ignorantly ignoring that are going to give them opportunities to succeed. And so another example might be something very pragmatic, is that if prepaid cards are used in a significant way in a country as a way for foreign workers, domestic workers in a country to be paid, why not add a remittance capability off of the back end of the prepaid card so that they don't have to go to a dusty money remitter and do something in cash? So I think it's understanding a local economy, whether it's the people who are receiving the payment or those who are sending the payment, and building products that really respect and embrace the cultural norms of those societies.
That's lovely. I especially like your word respect in there as well, because there is kind of like, it's not a cut and paste, is it? Respecting those norms and embracing them. That's wonderful. Ramon, similar question to you. What is the optimum approach here if it comes to sort of expansion via fintechs using cross-border?
I mean, Gary mentioned several things already that are really relevant in there. I think it is important to understand the market that you're going to be playing in. I think if you see the big successful fintech expansion cases, so for example, the expansion of Revolut into US, I mean, the market wasn't extremely different for them. They went into an area that culturally it was similar. So that gives you a potential advantage. There is another angle, which is, if you don't understand the market, it's important to get expertise in the local space. So getting partnerships with local players or even hiring people locally is going to be really, really important for the benefits on that. And then my always phrase is also understanding the regulations. I mean, playing in a new market is not only about seeing the market opportunities, but also seeing the potential challenges that you're going to be facing if you are not adapting to the local regulations. I mean, you're going to see you see opportunities with the American market, with the complexities on regulation, with all the different regulators that are going to be playing depending on the states. But if you go to, for example, Switzerland, the regulatory space is a lot more complicated than other countries. Each one of the regions will have different aspect of, if you are going to expand in new markets, you need to understand where you're playing in and what are the challenges in regulation. I mean, there was a case with the advent of UPI is introducing some really strict regulations in terms of payments in India. And a lot of the organizations have to adapt to that change really quickly. So it's not as simple as just coming in with new ideas and new capabilities. Understanding the challenges that the regulators are going to be bringing and seeing how you're going to be able to address those and play with those, I think that is important.
I agree. I think there's also my two penneth is that there's something about going to a new region and setting up, but there's also something about maintaining regulatory compliance and and standardization and keeping an eye as well. And I think we should have a look at the poll results, because I'm very interested to see kind of the impact or the expected impact over the next 12 months of cross-border payment transactions. Wow, that's so nobody thinks that their transactions are going to decrease. No significant change either, so kind of like not even kill, but top of the shop, over half, a significant increase of over 25%, moderate increase a third, 33 and a third, and then a slight increase 13. That's a stellar set of results, actually reflecting the conversation we've just had. And Stefan, sort of coming to you in closing, because we covered an awful lot of ground in this webinar. We've covered market uncertainty, we've covered emerging technology, market expansion, and now we have this set of results as well that says, we expect things to increase. There is a hell of a lot to consider here. Where should, first of all, I'll have your reaction on the poll results, and then will you tell me, where should the fintech start?
Mm-hmm. Well, I've been looking forward to see the poll result on this one, because it will tell a lot about the audience. if we would have like only traditional banks, we would have like a result more on the bottom. I mean, the other way around, I would expect it, because they are already having a lot of the, of the flows currently, where I think now, we have a lot of the currently, the poll was based pretty much on a couple of fintechs, which are actually seeing the opportunities and seeing the potential into cross-border, and expecting that it's going to flourish, which is great to hear. And to your point, what you asked and what we haven't talked about a bit yet to the full extent is, Ramon, you just talked about like how to scale and what is the right thing to, for a fintech to scale it, also like replicate success in another market, for instance, which is similar to your home market. I also think, and we haven't talked about that one, partnerships overall. I mean, it's a webinar. Yeah, it's not a selling occasion, but I truly believe that fintech should focus on what they can do best, and should also, especially in the beginning and for quite a bit of time, should also build their tech stack, if they can and allow, on partners. We are one of them. We are not the only one, but I think it's very important that you can trust with a partner who can bring exactly like the regulation, the complexity, the reach, everything from one hand, which will make it still tough for you as a fintech to succeed, but way easier because you have one big burden less to think about, right? So let me pause on that one. I think partnership is also an important one when it comes to fintechs.
And I think that's a perfect ending. I also love that poll result, because despite us talking about market uncertainty and stuff like that, our audience at least feels that the outlook is strong and is looking good and it's positive. So that's great. The other things I took away from this conversation is connectedness, harmonization, respecting sort of local currencies, partnerships, CBDCs, and all of the other emerging technologies, and this sort of continued coexistence as well across it all. So thank you so much for your insights. I know the audience got a lot from that. Apologies for the questions that I wasn't able to get to. Sorry for that. But gentlemen, thank you. Ramon, Gary, Stefan, thanks so much.
Thank you very much.
Thank you very much. My pleasure.